What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this Sunday afternoon. So what we're going to be covering in this update is there's some very important key aspects of the Ortex data that we are looking at that are honestly incredibly bullish for the price action that we have going into next week. Now, in addition to this, we have to go over this massive gamma squeeze potential that a lot of us have been looking for since the last significant run-up that we saw back in June. Now, the option chain for this week is setting up for a really strong price movement to the upside if we can start the week off strong and get past a couple of these key levels, which we are going to be going over. And in addition to this, at the current time in our markets, we have somewhat of a $169 trillion problem with the derivatives market and the banking system as a whole. This is going to put a lot of strain on these institutions, lead the way to margin calls, and it's just even more information that gives me even more conviction in holding my position in AMC. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button. So AMC closed at $50.16, and in the after hours, it went up another penny. So no crazy movements in the after hours on Friday. We did see some excitement in Thursday's after hours trading period, but again, I think we are going to see a lot of bullish price movement going into the next week, and here are a couple of the reasons why. So when we come over to this Ortex data right here, we can see that the utilization is currently at 91.44%, and the estimated short interest is 18.42%. But we have something very interesting going on with the exchange reported short interest data. When this data got released towards the end of this past week, we saw it came out at 18.76%. Now, the settlement date was August 31st. And when we go back and look at what Ortex's estimate was for this short interest number back around the time when the settlement date for these trades were to have taken place, they were estimating that we had about 17.63% short interest. So most likely going into next week, we are going to see a drastic increase in the utilization, and we could also see the estimated short interest crack an all-time high. We could potentially see it get even higher than 20%. Now, again, what we have to think about when we're thinking about the estimated short interest is that just because a stock has a very high short interest doesn't necessarily mean that it is going to squeeze right away, or this is going to be the metric that is going to cause the shorts to cover. But if there is more short interest out there, the utilization number is most likely going to increase as well. And from those data sources and research reports that I've shown you guys in the past, a higher utilization, if we can get above 95, 96 and get on our way close to that 99% or 100% utilization number, that is going to get us close to these forced share recalls that a lot of us have been looking for. And I want to make something very clear about these forced share recalls, that forced share recalls are they don't have anything to do with AMC as the company. It has to do with the relationship between the prime brokers, the lenders of the securities, and the institutions that are taking out these loans of shares. I've explained this to you guys a little bit in the past with this BNY Mellon article, but these lenders of securities can recall those shares at any time they want to, and they really don't have to provide a good reason. So there's a lot of things circulating out right now that, well, some of these large institutions have been loaning out their AMC shares. But again, if all of those purchases that they have made, the effective date was at the end of June, that potential selling volume that could have been put into the stock has already happened, and those institutions hold the key to potentially recalling these short positions, forcing a buy-in, and sending us to the upside. Now, we got to talk about this gamma squeeze margin call situation. Now, when we look at what we have for contracts in the money going into this next week, we already have 187,000 contracts. A lot of these, most likely they've already been hedged for. But again, everybody is incredibly bullish going into this next week. People are really excited about the potential price movements that we have coming up. and we have 256,000 contracts out of the money at the current time. I would expect this number to increase going into this next week, and let's take a look at a couple of these key levels for where we could see a lot of this hedging by these market makers who have sold these options. And again, the delta hedging process, when you sell a call, in order to hedge that call, you either need to buy an offsetting call contract to match up with the deltas to become directionally neutral, or you will go out in the open market and buy shares. So what we have is 17,000 contracts for September 17th at 55, 32,000 contracts at 60, 15,000 contracts at 65, and 16,000 contracts right now at about $70 strike. So what we're looking at here is I'm not sure why these contracts right here, the 51s, 52s, 53s, have not populated on this option chain, but the multiples of 5, we typically see higher open interest anyway. We did close above 50, so we did get these extra 30,000 contracts in the money, which has the potential for these institutions to put 3 million shares worth of buying pressure back into the stock, which could push us up even higher. So we do have somewhat of a gamma ramp going into this next week, and that could just be one of the aspects as to why we continue this uptrend. There are a couple of different aspects. There's the buying pressure from these institutions hedging calls, there is FOMO, and there is also small shorts covering their position. Now, when we think about what is going to cause these shorts to cover their position, it is most likely going to be them not being able to maintain these maintenance margin requirements, i.e. a margin call or a forced liquidation of their short position. The forced liquidations are going to be much less common because these institutions that are loaning out these shares and facilitating these trades don't really want to come out and forcibly close out these institutions of their positions. But when we come over to this unusual whales tweet, with AMC over 50, again, it is estimated that the shorts would lose nearly $412 million today alone. And that is just based off the reported short interest. So what we are seeing here is that these shorts are taking very significant losses. And when you think about the price action that we've seen on AMC over the last couple of months, and you compare that to the Ortex short interest data that we have been receiving, what has been going on is after this significant run up, we saw a slight decrease in the short interest, but the shorts around these levels over here were adding to their short position. So they were green on their shorts coming down in here, but now we are seeing a reversal in the price action. So what's happening is that the shorts that might have entered at between 50 and 65, as the price starts to climb higher, these shorts are going to start to get nervous, and it could lead the way for those smaller to medium-sized shorts to start to cover their position. Now, we've talked about this a couple of times on this channel before, but what we really need to be focused on is not the really large institutions with boatloads of money that can keep maintaining these maintenance margin requirements. Those institutions are not going to be the ones that start the squeeze. It is going to be the smaller to medium-sized institutions that have such a significant loss on their balance sheet that they are not going to be able to continue to hold these positions any longer. Now, let's get into this $169 trillion issue that is looming over our broad market. So we've talked about this a couple of times in the past, but with the dates coming up pretty fast, this is something that we need to keep in mind. So when we come over here, we can see that the Federal Reserve Board announces the individual capital requirements for all large banks effective on October 1st. The last time that we talked about this, we compared essentially the difference between this report from the Fed and the previous report from the Fed. They are incredibly similar, except for this one big key detail. Those capital requirements ensure that the large banks tested will hold roughly $1 trillion in high quality capital, enough to survive a recession and still be able to lend to households and businesses. So, this sounds pretty bearish for our overall market. We've also seen Fed Kaplan and Rosengren basically come out and say that they are going to be selling their entire equity positions going into the end of September due to, quote, ethics concerns. I don't really think that's the case. And with all of the different events that are supposed to be coming into effect on October, such as the debt ceiling, inflation numbers, we have a lot of things really circulating right now. It is not looking good for our broad market, and we could see a significant correction. Now, we also have to think about the over leveraging. When we come over to this page right here, this is something that we have brought up a lot, but it is still incredibly important. The U.S. banking system has a $168 trillion nightmare looming. It was ignored in the written testimony for that day's Senate banking hearing. What we can see here is that These four largest commercial banking institutions hold $168 trillion in derivative exposure. Now, we know that Phase 5 UMR has already come into effect. We know that NSCC 005 is legally enforceable. So what we are seeing here is the start or the ramping up of this liquidity crisis and this liquidity drain that we have been talking about on this channel for a very significant period of time. And again, we have been talking about the potential for a major market event to occur in Q4 since about May. Now, the wild card in this situation, which is essentially why nobody can ever really predict when major moves are going to happen in the market, is the Federal Reserve. If they can figure out a way to continuously kick this can down the road with whatever policies that they are trying to put into play or whatever asset purchases they are going to continue or discontinue, they may be able to delay this situation. But the fact that they would try to delay the situation would just make it even worse when it would eventually come to fruition. Now, the main thing that a lot of people are looking for is the Fed's tapering of asset purchases. At the current time, Goldman Sachs has a 70% probability that the Fed is going to start the tapering of asset purchases in November. Now, we also have the debt ceiling situation coming in October. If the debt ceiling situation really starts to play out the way a lot of people think it can and the market starts to sell off, the Fed is not going to taper its asset purchases. So the Fed is kind of between a rock and a hard place situation, which they may not be able to really do anything with the situation that we have unveiling. And the fact that the Fed may not be able to do anything would really make this situation even worse than it would have been previously. So that is going to wrap up this update on AMC and the broad market. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you can stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.